Hi, I'm Thomas Hare, Chief Content Officer of the Performance-Driven Marketing Institute, a not-for-profit trade association that serves companies in the performance and direct-to-consumer marketing world. Welcome to the latest episode of Take 20, created by the PDMI's Brand Response Council. We apologize for the slight delay here at the start, little technological difficulties, but we're back with you. These 20-minute live conversations feature leaders in the performance marketing world speaking about the hottest topics in the industry and are scheduled twice per month, representing just a part of the PDMI's virtual education arsenal. The PDMI Workshop Council's seasonal seminar series will return for its second 60-minute winter webinar titled Are Your Business Payments Safe? On Wednesday, February 24th, while PDMI East Virtual, a two-day, 8-webinar event replacing our previously planned in-person event, will take place on March 9th and 10th. You can find more information on and your opportunity to register for these events at our website, thepdmi.com. Before we get to today's conversation, a quick housekeeping note. The group will be addressing any questions from the audience at the end of today's session, but you don't have to wait to ask them. Utilize the questions tab on your control panel to type in, send your question in. We'll collect them and try to get to as many as possible in the final moments of this episode. Today, we are taking a look ahead in this conversation titled Vertical Markets to Watch For in 2021. Chris Foster of Modern Postcard, our scheduled moderator, is unable to join us today. So I'm pleased to be hosting this great trio, each of whom serves on a PDMI council. On your screen, you can see Shai Bar-Ziv, Director of Business Development and Partnerships for Rapid Phone Center and a member of the PDMI Workshop Council. And you can also see Mike Johnson, Vice President of Business Development for Paymerang and also a member of the Workshop Council. Marcelino Miyares is joining us via audio. He's the Managing Partner of D2H Partners, and he's a member of the U.S. Hispanic Council. Hi, Marce.
Hello.
Thanks to all of you for joining us. As we know, 2020 changed the landscape, but in looking at various growing industries in the U.S., the crash around travel, entertainment, and dining in particular sets up each for a big bounce back in 21. There are, however, plenty of other different industries that are emerging and surging and poised for a big year this year. There are obvious ones that are home-based, such as e-commerce, home gym equipment, and pajamas and athleisure wear. But what about surprises like CBD or online gambling? Are comfort and cozy the keywords for successful industries in 2021? Will emerging vaccinations truly open up the restaurant industry later this year? Or will outdoor equipment, RVs, and camping-related gear continue to attract new buyers? We're going to dive into some secret and not so secret industries that are ripe for explosion and the market penetration, especially as we continue into this volatile and kind of unknown year. So I'm going to open it up. First question, I'm going to go to you, Shai, first. Do you think at-home creature comfort industries are going to continue to make hay this year, and why?
I think, yeah, for the majority of the year, we're going to see that continue to be the case, because 2020 was exactly like that, and I think there's a lot of opportunity for growth still there. I think a lot of people have seen the growth of courier services, delivery services, online grocery sales, that kind of thing, DIY stuff. All of that is going to continue to grow as people stay indoors. I was reading an article by the Wall Street Journal that claims that only 10% of the world population is going to be vaccinated by the end of the year. So 2021 doesn't look that different, at least the first 6 months from 2020, where those, as you call them, at-home creature comfort industries were growing. So I think they're still set to outperform this year, at least through the first 3 quarters.
Yeah, great. Mike, what about you? What are your thoughts there?
Yeah, I would agree. One of the things I think is that maybe a difference between the East Coast and the West Coast. From just paying attention a little bit to the news, it seems like the East Coast has been able to get some of the vaccinations out a little bit more quickly. I think, specifically in my area, in New England, a lot of people are going outside doing a lot of stuff in the summertime and the springtime now. So I think that, the first half of the year is definitely going to be challenging, but I think the second half of the year it's definitely going to open up a lot faster. And I think it's going to be regional. Each region's going to be affected differently, depending on how fast they can get the vaccines out, how willing are people to get the vaccines as well.
Mm-hmm. Absolutely. Marce, what about you?
Well, sort of zooming in a little bit on the Hispanic or the Latino market, it's not a secret that the COVID is affecting the market disproportionately. And a huge part of that is because even though Latinos represent, a little shy of 20% of the population, they represent probably 35 to 70% of key essential worker industries. So they haven't really, they're still out there, and they haven't really taken advantage of the creature comforts, because they're the ones serving the creature, you can say, serving the creature comforts. That said, and I think it comes up in later questions, Latinos are adapting in other ways that we look forward to at least some geometric growth in some of these vertical categories going forward.
Yeah, makes sense. Another question here: will the merging of e-commerce and luxury goods continue, or will users start to trickle back in store for more expensive items? Do you think? Anyone can jump in on this one.
I mean, I have a big bet on this one. I really think e-commerce and luxury are going to continue to merge and grow a lot. I think we've seen on the news some really big announcements. I can't remember. I think it's the Richemont Group. They own Cartier, and they invested about $1 billion into a partnership with Alibaba, and they're going to try to bring luxury goods to customers in China. They cannot travel abroad to buy luxury goods as they used to, and that market is exploding. And I think a lot of businesses on the e-commerce side a lot of industries have been slow on their growth because you have giants like Amazon competing against you. But in the case of luxury goods, there's kind of this contradiction between the interest of luxury goods and the interest of Amazon, because Amazon is sort of like the everything store. You can find anything there, and luxury goods are more exclusive. So that sort of friction between exclusivity and just and access to everything, any kind of product you want, is going to be something where a lot of luxury goods are going to capitalize. And also, luxury goods don't really have a key dominant player in the online game. You cannot name one really big luxury brand in the online game, and that's why we have these partnerships sort of happening between Cartier, the Richemont Group, Arnault, which is Louis Vuitton, and all these big brands. So I think there's going to be some interesting mergers, some interesting partnerships in e-commerce for the big luxury brands trying to create a dominant player in that market. And Amazon is obviously jumping into it as well, and they're creating a luxury stores app, and they have they're bringing in partners that are also big. So it's going to be an interesting fight. I think there's definitely going to be a lot of growth between those two sectors of the retail world. So that will be interesting.
Great. Hey, Marce, what about you in the Hispanic space? Thoughts there?
Yeah. So I agree, with everything that you've said, Shai, except for one little detail, and maybe some of my colleagues on the Hispanic Council might throw a shoe at the screen. But for the immigrant generation, which is substantial in our market, and the first generation, so they're kids, shopping on Amazon is aspirational. It is luxury shopping. We sell luxury, what could be considered luxury goods, meaning anything above $300, $500, $600. We've been successful at selling it over the phone, but not so much online. I think e-commerce in general is growing in Hispanic, and Amazon is the most trusted retailer online. In fact, it's the most trusted retailer, period, in the United States among Hispanics. So to the extent that Hispanics can aspire to buy online and roll that up into luxury buying, I think we're going to see some growth there.
Interesting.
Tom, it's really interesting. I saw this morning, and I don't watch the news a lot, but a couple things, that 80+% of Americans now have an Amazon Prime account, which adults,
right,
which really amazed me. And then the other thing I saw, which was really interesting, was a commercial for Microsoft Teams, where this company that built custom bikes was talking about that they switched to that model where they're now doing stuff over Microsoft Teams to sell to customers, and they feel that moving forward, that's going to be a big vertical for them to be doing that online, doing a lot of, because it used to be people would come in and buy the bike, but now they're meeting online and they're doing it online. They're building these bikes for them, and I think as more people see that successful, people are going to be buying a lot more online. And the big thing too is like with Amazon and these other companies, they, my nephew works for a delivery company, and they've gotten to a point now where, if you don't want it, they don't even argue with you. They just take it back. It's so expensive to deal with it. So they just like, that's fine, just take it back. And so I believe because of the service that they're providing, that a lot more will go, of these luxury items will go that way through e-commerce.
Yeah, makes sense. Makes sense. I mean, Amazon is behemoth and just getting bigger, and that 80% number is just striking, really, really amazing. So,
Yeah, I think just Tom, just to talk along that for a second, because I think that's a really cool topic. Is something that Mike was mentioning about Prime subscribers is that it's absolutely true that obviously the majority of Prime subscribers in the U.S. I think it's 150 million or something like that. So any branch of e-commerce that they want to roll out, they're going to utilize those Prime subscribers to bring in a lot of the consumer demand. And I think in the U.S. most definitely Amazon will be a dominant player in the luxury goods market. I think what I was alluding to at the beginning was more on a global scale, because those are European brands that are merging with Chinese giants like Alibaba and trying to grow things within their vicinity. But I do think it's true what Marcelino and Mike were mentioning about getting a lot of the people buying in Amazon, because you already have that that huge amount of traffic and consumer and users already accustomed to that platform. So that's going to be an interesting fight, man. But I don't think the big luxury giants are going to surrender that one in the U.S. I think they might try to step in. Yeah,
makes sense. Makes sense.
Yeah.
So obviously, at home and home-based activities have become huge. Are we seeing new habits form? Is this something that's going to be long-lasting over the next 2 or 3 years? We're talking like cooking, puzzles, crafts, etc. Mike, I'm going to throw this at you. What do you think? Are those markets going to continue to grow?
I do, because I think people are starting to enjoy getting back in that family mode. Going camping, doing stuff outside, doing stuff at home, doing crafts, doing things, that I think we all kind of were moving away from for quite a while. And because we were so busy going to soccer games and running here and doing all that stuff, that now, at least in my family, I've got three boys, and we did a lot this past year, and I think we want to keep doing that. We want to enjoy. I saw more people on the lake this year than I've ever seen. I saw an article that Maine had the most visitors they've ever had at campgrounds in 2020, which really surprised me. So I do think that families are starting to unite more, and they're going to keep that up for a while, because people are really enjoying spending time with the ones that they should be spending time with, but we're so busy in our lives we haven't in the past. And I think over the next few years we're going to keep doing that, especially with all the toys that we bought. The boat, the four-wheelers and the jet skis and all that stuff, the motorhomes that everybody bought. They're going to be spending a lot more time, because they've got a few more years to pay for them.
Yeah, Marcy, I want to go to you next on this, because I feel like the way and the nature of the U.S. Hispanic market and how they live together is an intriguing way to look at this as well.
Yeah, I think on this question, I think Hispanics Latinos are gonna represent the norm that Mike was just describing. We're by definition extended family livers, multicultural, multi-generational family households. So we're already spending a lot of time with each other. Our challenge is how to get out of the house safely. So I think we're going to see a lot more. I think it's going to drive outdoor activities, and I think it's also going to drive shopping once malls and traditional shopping destinations open up, because we always shopped as a group anyways. So I think everybody's raring for some sense of normalcy, and Hispanics in that sense are gonna follow the general market lead.
Yeah, nice. Shai, what are your thoughts here?
I mean, when you said home-based activities, right? And that I think that's going to continue as long as, like Marcelino was saying, people are staying indoors. If we start getting a lot more, if this whole vaccination thing starts getting sorted out, within this first year, then I don't think the trends are going to go on for 3+ years. I think we might still be seeing a lot of growth in the DIY section, or at-home based products or services for the next year. But then we're going to slowly go back to open air venues. I think a lot of people are going to rejoice in the fact that they can reconnect with nature and socialization and all those things. So I think the home-based activity trends are going to still grow, but not for an extended period of time. I think as soon as things start to open up, marketers are going to start to gear things towards things in the outdoors, etc. But I do think a lot of family-related activities, are a great target for marketers, and I definitely agree with Marcelino as far as Latino families being, very close knit, and uh, there's a lot of strong family values to capitalize on there. So
Hmm.
I definitely think that's true. But
Yeah.
over the 3-year period, we're gonna go back outdoors. I think a lot of people um, are hopeful for that, at least. Yeah.
Yeah, I would think so. I think we got time for a couple more here before we go to the audience. And a reminder to the audience, please use the questions tab if you want to send in a question for the group. Another kind of area that's various areas really, but all kind of in the app-centric zone, apps for
Right.
e-learning, dating, fitness, personal development. They've been massively exploding as we're all sitting home, like trying to figure out what to do with time and how to create these activities. Do you think that will continue? Is that because of the fact that it's app based and it's on your phone and we're driving new habits? Will that continue? Shai, I'm going to go to you first on this one.
Yeah, I mean, we have a lot of clients in e-commerce, and we see just continuous growth in that sector, man. It's really unbelievable because the e-commerce industry by itself is worth $3.5 trillion right now. It's set to go up to 7 trillion by 2026. It's going to double in size, and a lot of the a lot of the ways that new entrepreneurs gauge whether they can scale within an environment is whether it's $1 billion industry, and we're speaking about multiple trillions here. So every single one of those niches in e-commerce, and specifically in apps, is going to continue to grow and explode. Um, E-learning, I think, is a great sector of that of the e-commerce business right now, because there's not only opportunities for you to develop courses and content, but there's also, interest in hardware and equipment for virtual class technology and all that stuff. So you have just a bunch of opportunities there. E-learning. I'm not so sure about dating. I haven't done that much research into dating, but I know that e-learning, fitness. I'm engaged now, so these things
Mm-hmm.
cannot happen. So that's the situation there. But
Yeah.
I'm very in touch with e-learning, personal development, courses, content, fitness. All of that is just going to be booming because there's just so many ways to explore it. Um, I think that's and I think just one last note there, as far as fitness and personal development, social media really boosts that nowadays. So I think a lot of the content is centered around that, and that's just going to pull in the traffic towards those verticals more and more. Yeah.
Right. Mike, can I swing this one over to you next?
Yeah, the one thing that I think is going to happen, though, is a lot more consolidation. When you go online to get something, there are 13 apps for one thing. You know what I mean? That's just too many. I think what will happen is they'll either go out of business or they'll merge. I've been doing I think I mentioned to you before, I'm trying the keto diet and doing that. And, every day I get online, there's a new one. Hey, try this app out, and at the end of the day, they all do the same thing. So, I mean, there's a lot out there, but I see the bigger ones, merging and taking over. So I think we're going to continue to use them. I think there's going to be some great ones out there, but I think hopefully what we'll see is, some more consolidation within those apps, and really get the best out of all of them into just a couple. Even dating, you see some of the big ones out there, and I think throughout time, the ones that I don't know how big Farmers Only really is in New England, so it'll be interesting to see what happens over the next few years. I think they're always going to be developing them, but I do see a lot of consolidation, because there's just too many at this point.
Yeah. Marce, what about you? What are your thoughts here?
I think as far as the Latino market, for sure. I think COVID, because of the disproportionate impact it's had on the market, and I'm not a sociologist, but if I had to bet on a trend, a short-term trend in the next 12 to 18 months, is we're going to see a spike in aspirational app usage. So language learning, self-learning, technical skills, anything that allows a parent to say, I don't want this for my children. I need to make sure that they don't have to be the essential workers in the next pandemic, I think this is all going to serve as an aspirational trigger en masse. And I think it's also going to apply to financial services and health services to the extent that you can get those online. So telemedicine, insurance services, investing services, things that they can learn on at a small scale on their own. So beyond just sort of the self-improvement, I think sort of the financial stability is going to be a big factor for our market.
Yeah, makes sense. Makes sense. Before we go to the audience, I've got a couple questions in. I'm going to ask one final question of the group. I'm inserting this one without warning, but I think it's probably going to be, well, it might not be easy, but it'll get you to think. If you had to pick one vertical this year to look out for, what is it? One market. And
it's a hard question.
For Latinos, I'd say financial services.
Okay.
I would think, telemedicine, definitely for me. I know with everything going on with me, I do a lot more online with my doctors, and I think that they've seen I know a few companies out there that are just growing rapidly throughout this, and I think telemedicine is going to just keep growing.
That's a good one.
I'm gonna bet on e-learning, and the reason is because it's just becoming much more commonplace for people to generate their own content and just offer it out. I think that's gonna be a boom. So I'm probably gonna bet on e-learning for this year. I think there's gonna be tremendous growth there.
That's great. Thanks, guys. A couple of questions from the audience here that we'll get to before we wrap up. What are your thoughts on DTC growth for 2021? And I'll add a little extension to that and say, we saw a lot of success of direct-to-consumer TV last year in the United States. As usual, when there's a crisis and advertisers pull off the air, direct-to-consumer did well. What do you expect that kind of growth to continue? If so, is there specific verticals that might be most effective in? Marcia, maybe I'll start with you on this one.
Well, it goes kind of with my previous answer. So, I'm gonna define D2C as direct response marketers that are not in the as seen on TV kind of world and tone of advertising and media, creative and media strategies. So I think financial services is going to be a huge D2C play, along with healthcare and telemedicine and the three verticals that we talked about. But definitely, I think financial is going to be the tip of the spear and a door opener for a lot of other categories. The stronger and more stable our market gets in that financial pyramid, the better off it is for the economy in general.
Right. Makes sense. Guys?
Yeah, I'll just jump in here real quick and say, one of the things I think, and I've talked about this before, is that I don't believe people are going to be rushing back to the office. I think that a lot of people are going to be working at home. They're going to have a lot more visibility on listening to radios and TVs, and I do believe that market's going to keep growing. I mean, there's going to be just a lot more visibility, and it doesn't really matter the vertical. There's going to be a lot more opportunity out there with people watching and paying attention than they have in the past, because almost everyone has either the radio or the TV on while they're working nowadays, and they're not I think we'll slowly go back in the office, but I think it's going to take quite some time, and I think a lot of companies have found that most of their employees are just as productive at home and it costs less money.
Right. Yeah, I mean I agree with both my colleagues here, because there's just a lot of eyeballs on TV, and there's going to continue to be eyeballs on TV throughout the year, and I think it's just a great opportunity for anybody that's doing D2C. I expect that we're going to see the same sort of growth this year. So if you're a D2C marketer, now's the time.
Yep. Yeah, makes sense. One last one here. This goes back to the question we were kind of talking about app use and apps for everything and 13 apps for everything, to Mike's point. I've noticed this with the increase of app use. Have your businesses seen an influx of D2C advertising via social apps? If yes, If you have an expertise in this, are there any words of wisdom you can share or pitfalls you can watch for?
Tom, I didn't quite catch the question. Can you repeat it? Sorry.
Yeah. The increase of app use, have your businesses seen an influx of D2C advertising via social apps? If yes, any words of wisdom or pitfalls to watch for?
I mean, we've been advertising on the Google Display Network, which is working well, and that's sort of the method through which you can advertise on apps that are within that network, and that's been that there's a lot of ways that you can segregate the interest of the audience that is using a specific app, so that is very functional. So there's plenty of ways nowadays to get the kind of traffic that you want by chasing these app users and sort of going to find your consumer straight there. And tools like the Google Display Network really make it easy for us to really select where we want to display our advertisement and retarget audiences, etc. So definitely that's good usage. I don't have much experience on the Facebook side of things, but I know they also do it there. So very important to segregate your audiences, to really try to nail down what your consumers are doing, who your consumers really are, try to describe them very well and see where you can find them in that app ecosystem, and then go chase them, because you can do it directly, and you can have direct attribution for how those consumers are converting. So I think the Google Display Network is an excellent tool for anybody looking to pursue remarketing, etc., for D2C verticals.
Great. Mike, Marce, anything to add there?
Yeah, all I'll quickly say is that, I had lunch last week with a former colleague, and she's in real estate now, and she was telling me that she is using Facebook and some of the apps that are involved, and I was really surprised to hear how much she was actually doing in volume in the real estate market. And, I do believe that, she's able with those apps to get to the right people and get the right information. And, I definitely see that as a growing market, especially as it gets more defined. I don't have any advice, but I can tell you from my experience, from talking to some people, that it is working out well for them. They're just trying to figure it out, though, at this point.
Great. Marce, anything on your end?
I just underline what's been said already. We don't have a ton of experience beyond the social apps, but we do see in the last 6 months, our social campaigns are just exploding. So the use of social platforms as a response vehicle has grown significantly for us, and measurably, most important, for us.
Absolutely. Well, thank you to each of you, to Shai, to Mike, and to Marcelino for your tremendous feedback here. We really appreciate it, and we appreciate all the work you do as members of the PDMI's councils every day. So thank you. For the audience, your next opportunity, thank you for joining us. Your next opportunity to attend a live online Take 20 is Wednesday, February 17th, as we discuss multi-dimensional data aggregation. Please visit thepdmi.com/take-20 to check out the upcoming schedule and to register to attend today. Thanks again for checking out this episode of the PDMI's Take 20. Enjoy the rest of your day, the rest of your work week. Stay safe and stay well. Take care. Bye-bye.
Thank you.
Thank you, guys.